Is the property market going to crash? I'm going to be honest with you guys. Things are starting to get bad again. 2021 is starting to turn out exactly like 2020, with Melbourne and Sydney in extensive lockdowns and no end in sight. Even though we're getting used to staying at home, working from home, seeing our friends less often, and just going for our daily walks, we can't ignore how bad the damage these lockdowns are having on our economy. Despite the booming housing market, there are a lot of issues in our economy, and a lot of small to medium-sized business owners are really feeling the stress and hardship. When COVID first started, the vacancy rate in the Melbourne CBD retail sector was only around 2.5%. Most of the shops there were occupied, and the small business owners in it were doing pretty well. Fast forward to now, the vacancy rate has shot up to 13%, meaning a lot of small and medium-sized business owners have either gone bankrupt or closed down for good. To show you just how bad things are, there is a guy in my apartment building who used to own 3 cafes, and they were all doing really well, but he's down to his last one now, and he doesn't know how much longer he can keep that open for. However, if we now look at the Australian property market and the Australian stock market, or even the cryptocurrency market, everything is at record highs, and this simply does not make any sense. So even when the business owners are getting absolutely destroyed, and workers in the hospitality and tourism industry are losing their jobs and relying on government support to get by, people who hold assets have never been happier, and they are seeing their wealth grow by extraordinary amounts. We currently have this two-tier society where asset owners are becoming filthy rich riding the inflation train, and those most vulnerable are being left behind by high inflation, high unemployment, and a lack of wage growth. Even if you don't want to become a property millionaire or build a multi-million-dollar property portfolio, I think it is very important to understand how this two-tier society works and what we should expect going forward so we can best protect ourselves during this period. With so much talk about negative interest rates, a double-dip recession, and lockdowns until 2022, there is a lot of fear and confusion out there. So it is very important to understand what the next few years might bring and how it will affect the property market. Will the property market continue booming, or will we see a slowdown in growth, or maybe even a correction? Hey guys, welcome back to the channel. My name is Zeng and I make weekly videos on the topics of personal finance, real estate, property investing, and the Australian housing markets. So if that's something you would like to learn more about, definitely subscribe to the channel and smash that like button right there. It will go a long way in supporting me. As always, please understand that this is not financial advice and I am not a financial advisor. I am simply sharing with you my personal opinions and strategies. And I will always recommend you to do your own research and don't just rely on the opinions and information provided to you by a guy on the internet. And without further ado, let's get straight into the video. Let's start by talking about the extensive lockdown in Melbourne and Sydney and the state of the Australian economy, because this will dictate government actions and policies. Understanding what the government and the Reserve Bank of Australia is likely to do in the coming months and years will give us hints about how the property market is likely to behave, and this is going to help us make much better decisions. We had a lot of uncertainty and fear back in 2020, and if the Reserve Bank of Australia and the Australian government did not intervene aggressively, I think it would be in a very different place right now. It could be argued that our property market would have seen a very severe correction if the government did not intervene and introduce all the generous government schemes to support the property market. Fast forward to now, the Australian economy was on track to make a very strong recovery, but due to our most recent outbreaks, we have started to see that all turn around, and we are now heading back into negative growth. Let's be honest here, with Melbourne and Sydney, our 2 biggest markets now in lockdown, the Australian economy is likely to enter what is called a double-dip recession. Now, how is the government and the Reserve Bank of Australia going to act, knowing just how fragile the Australian economy is? Well, my personal opinion is that the Australian government and the Reserve Bank of Australia will do everything they can to prevent a correction in the property market, because a correction in the housing market is going to have a flow-on effect for the rest of the Australian economy. Just think about it. Everything is going very bad right now, and the only thing that is holding our economy together and our consumer confidence high is the booming housing market. And the booming housing market is supporting jobs in construction. It is also generating a lot of tax revenue for the state governments, and it is also supporting confidence. And the people who are property owners are now seeing their wealth increase by very significant amounts, meaning they are more likely to spend money that is going to help with the recovery of our Australian economy. If we go back and look at history, we have seen this over and over again. The Reserve Bank of Australia and the Australian government will do everything they can to keep the housing market afloat. Because if the Australian property market crashes, so will the Australian economy. If we go all the way back to the 1990s recession, or the 2008 global financial crisis, or even to last year, back in 2020, when we saw the extensive lockdowns, the governments intervened very aggressively with interest rate cuts and very generous government programs to support the housing market. Even though this two-tier society is very unfair and is creating a massive gap between the haves and have-nots, it is also the only society that we have. And for now, the government has to do everything they can to keep this afloat and keep consumer confidence high. To get a better understanding of just how drastic the difference between the booming housing market and the struggling Australian economy is, let's take a look at some data. If we look at the Australian Economy Activity Tracker, we can see that massive drop in economic activity in 2020, followed by a sharp rebound as the government pumped the economy and the property market full of stimulus and cheap debt. And by March 2021, we were starting to see positive economic activity. However, this was short-lived, and we once again started trading back into negative territory as we dealt with the extensive lockdowns. If we now look at the monthly turnover by industry for July, we can see that most retail industries are getting absolutely destroyed by the extensive lockdowns, with clothing outlets, department stores, cafes and restaurants recording double-digit declines. There is no wonder why the vacancy rate for retail is so high right now. The businesses are really suffering, and when we do eventually reach our goal of 80% vaccination rate and get out of this lockdown, it is likely that our biggest cities will no longer be the same. So what does all of this mean for the housing market, and what should we expect going forward? If we look at the month-on-month change in dwelling values, we can see that property prices are indeed still growing at a very impressive rate. This is amazing because Melbourne, Sydney and Canberra, our three most expensive markets, are now in lockdown. People can't even go inspect properties. Even though the rate of growth is slowing down, a monthly growth of 1.6% is still a huge number. That growth is almost as high as the yearly wage growth. And this is making housing more and more unaffordable, and it's simply unsustainable. Look, I am very bullish on property over the next few years, but I think it is very important to have realistic expectations going forward. And I personally do not expect our markets to grow by another 20% over the next 12 months. A lot of people thought the extensive lockdowns in our biggest cities is going to reduce consumer confidence and soften the market. But the market has actually done the complete opposite, because the supply is now reduced even further and the demand is still just as high as before. I think the government is finally doing a good job in getting our vaccination rates up so we can finally reopen our economies in a few months' time. Now, this is going to have an interesting effect on the Australian economy and the housing market because the government has not announced any additional stimulus. Even with our major cities reopening, it is unlikely that we will see a V-shaped recovery because of all the factors we have just mentioned, with so many small and medium-sized businesses going under. These businesses had employees, they had owners, they were paying insurance, they had loans with the bank. So these businesses closing down is going to have a massive flow-on effect that is going to be felt in pretty much our whole economy. Consumer confidence is also likely to be quite low when we finally come out of lockdown, and people are not going to spend money like they used to. With no further government stimulus or interest rate cuts, my guess is that Melbourne and Sydney is going to see a lot less growth in the coming months because of how unaffordable the housing market already is and how bad the lockdowns were. Another factor to think about was that because of the lockdowns, real estate agents have not been able to appraise properties or conduct inspections, and therefore there's no supply coming onto the market, which is driving demand at the moment. However, when restrictions are finally lifted, a lot of vendors are going to get the opportunity to put their properties on the market, and this pent-up demand to list their properties is going to create a lot of supply coming onto the market all at the same time. So my personal opinion is that we are going to see a much softer Melbourne and Sydney property market in the coming months and maybe years. Does this mean we should not invest in property and wait for the market to cool? Here is the thing, even though I don't see much value in Melbourne or Sydney anymore, I still see plenty of value in the other states. We need to remember, while Melbourne and Sydney have been in extensive lockdowns, markets like Perth, Adelaide, Brisbane and Tasmania have all been thriving. Their recovery has been very strong. In fact, things are almost back to normal in these other states with consumer confidence very high and their property markets are ticking along very nicely. There are also a lot of jobs coming back, especially in Perth, where the mining sector is benefiting on the back of very strong commodity prices. Now, this is where it gets very interesting. Because of how bad Melbourne and Sydney have suffered over the last few months, it is likely that the government have to at least consider the idea of lowering interest rates even further, or providing further government stimulus for the housing market. Lowering the interest rate further is obviously going to help the Melbourne and Sydney property market, but think about what that is going to do for the other markets that are already booming. I think you guys know what I'm about to say next, and it is honestly for good reason too, because I think Perth, Adelaide and Brisbane and Tasmania are going to do extremely well in the next few months and maybe years. With the announcement of the 2023 Olympics in Brisbane, the whole Brisbane market is going absolutely crazy. All the additional infrastructure is going to create a lot of jobs, a lot of demand for housing, and it's going to do really well for the Brisbane housing market. But if you're thinking about investing in Brisbane or in Queensland in general, there are also a few things that need to be careful of. However, if you're looking to invest in Queensland, it is also quite risky because a lot of the markets in Queensland are very oversupplied. Brisbane is definitely going to do very well, but some of the markets in Queensland are, in my personal opinion, still quite dangerous to invest in. If you would like me to go over this in a bit more detail, just comment yes below and I'll make a video on the Queensland property market. Look, even though we could see lower interest rates, we should not make investment decisions based on the expectations of seeing these rates. My personal strategy has always been to be careful and prepare for the worst so that we can benefit when the best happens. Look, even though we might see lower interest rates in the future, we should not make investment decisions based on the expectations of seeing these lower rates. My personal strategy has always been to hope for the best, but prepare for the worst. Going forward, Melbourne and Sydney has a few very tough months and maybe years ahead. And I'm not telling you to not invest it. I'm simply telling you to be more cautious when you're looking into these very expensive markets. Alright guys, this brings us to the end of the video. I hope you guys enjoyed it and learned something new. I hope you guys stay safe out there and I'll see all of you guys in the next video.